the last few days right after it was announced that there would be a reserve in the United States. In cryptocurrencies such as Solana, ADA, XRP, Ethereum, or Bitcoin were very gloomy. The market initially reacted excellently. We very optimistically broke through the 95,000 level on Bitcoin and 2.5 with a bit more on Ethereum, which turned into quite a temporary euphoria and gave our longs that time a boost where Bitcoin itself was already almost 100% out. That long position you see. Ethereum also looked quite pleasant, and it's not bad. We are still in the game with these two positions. We are in the positive, but there were moments of doubt, like yesterday or the day before, where we were maneuvering close to the entry price and even below that value for a moment, just for a moment. And today I will check what needs to happen in March for the market to really see something optimistic happening in the world of cryptocurrencies, so that this almost tragic February for Ethereum itself, where we closed it at over 30% in the negative, turns into the beginning of a trend reversal, so that all of this transforms into the fact that people simply once again believe in the crypto market and be willing to trust it with their money for longer than just a few weeks, which we saw was a problem and caused significant disturbances, even turbulence in our cryptocurrency bull market and in this flight, which has been ongoing for months, due to the fact that simply a lot of bad things happened in the Bitcoins that were bought by short-term holders were sold off in a panic by them, which intensified the cascading declines and made it very unfortunate. So let's see what's happening in March, what prospects we have, what needs to happen for the bull market to resume, and what are our chances for that. If you're interested in such videos and you like the work I do for you, then leave a thumbs up and subscribe to the channel. I would really appreciate it. Let's start with the material. So an analysis of crypto bubbles is unnecessary as we check to assess the current market sentiment to see how altcoins are doing. Because saying that the altcoin market is disappointing is like saying nothing at all. Starting with the largest altcoin and leader, Ethereum. Here are the reasons. Reasons to be satisfied at all. March is another month in the negative. January closed in the negative. February was a record weak month in history, and it's just simply bad de facto. March did not start well. Ethereum hasn't been this cheap since 2023, and I have to admit that when it comes to my past predictions and assumptions about Ethereum, I was wrong. I assumed that again, according to cyclicality and according to what always happened in the first year after the halving regarding what simply happened with Ethereum itself. Cycle after cycle, it should be good. The first quarter hasn't closed yet, but for now, it doesn't inspire optimism. So as I said, at the current moment, I would say that this bet didn't turn out the best. I could have bought more Bitcoin than Ethereum myself. That's what I did at the beginning. Then I mistakenly exchanged that Bitcoin for Ether in good faith. 2. Simply boost the portfolio, assuming that from around that period, it should have grown more. However, as it turned out, everything else did except it. Solana, XRP, even Cardano. All these tokens experienced better growth in recent months than Ether itself, or at least a smaller decline. So here, I believe that this time the market went a bit against us. And that bet, which seemed obvious, is not so after all, which doesn't really fill one with optimism. But later in the video, we will discuss this further. So locally on Ethereum, some people say, mention may drop to $1,500 or $1,600. That would be a 60% drop. One could assume it's rather unlikely. However, it is still a scenario that hypothetically, with such a weak token, is in play, and we need to have orders lower in our lands or gather capital on the spot to overall average out and lower the entry price to more down-to-earth values, considering the current valuation of this token. So I don't want you to think that I've suddenly become bearish on Ethereum. That's not the case. I simply still believe that we are in the space, but I am adapting to new realities, accepting what has happened, and just facing the truth. So, Ether is hitting the ground. It looks weak, and it wasn't the best bet for the first quarter, at least for now. A lot of unfortunate events and such confusion, chaos happened due to the fact that Bitcoin lost important support at the level of $92,000 and remains below. This level is important because, as you can see on the right side of the chart, it represents the average cost of purchase for short-term investors. Yes, and it is expressed by this blue line at the moment, where circle 92.5K. This is the shortcut of the chart, STH realized price. Yes. And this is something that illustrates the current situation for us. And the level is important because it often determines whether new investors have unrealized gains or losses. And the change from one state to another can affect the future direction of price movement and the momentum that is simply brewing here, because it's due to the fact that much relies on the psychology of investors, especially those new to the market, namely short-term holders, and the change in the state of their portfolio from profit to loss can trigger selling pressure, as investors simply react emotionally to visible declines in value. And currently, short-term holders are realizing losses. So they are under significant selling pressure, and our blue band did not defend this price. So when this happened in the past, during a bull market, usually the price of Bitcoin would drop to the yellow line. For example, here, look at how it looked in April of 24, right? So here we had similar things in May or November in the previous cycle. And currently, this level is $71.5 thousand, where hypothetically we could reach as a maximum. Slight decline in this correction phase. This is something that could simply happen and should be kept in mind. So I start this video pessimistically when it comes to Bitcoin, but such scenarios are currently emerging based on this data, which are up to date as a hypothesis, as a plan B, as something that could come true. I believe there's about a 30% chance of this happening with Bitcoin, and even after 1500, 600, we have a 35 to 40% chance, which is still less than the likelihood that it won't happen. However, these are not marginal values that can simply be brushed aside and erased from memory. We need to consider that something like this is happening and that it doesn't necessarily indicate the end of the bull market, but rather a sudden, strong surge caused by negative events in the market and speculation that has led us to this situation, and not another, simply because there's a lack of cash in the market. There is currently no additional liquidity that large institutional capital could invest in cryptocurrencies, and you know how it was with large capital. It was always simply followed by capital from retail investors, from private individuals, from people who followed like small fish nibbling at sharks, what the others do, what the bigger ones do, and they went with the trend. Unfortunately, if only those small investors were encouraged by rising prices, such a situation could happen. But liquidity could be added, for example, a reduction in interest rates by the Fed. Although for now, unfortunately, there's no reason to count on that. The situation is quite different than it was 2 or 3 months ago, when there was talk everywhere about significant interest rate cuts, back in February or March. Now there are pauses at the meeting on March 19th, and in 2 weeks, there will also be a 99% chance of this pause, and thus nothing is likely to change in the next 2 weeks, or even over 2 months when it comes to pure interest rates. Because at the May FOMC meeting, for now, it's also unknown whether there will be a decision about a pause. For now, the market is set at 50-50. Everything depends on macroeconomic data in next weeks that will emerge. That's how everything will continue to be estimated somewhere. Well, you can't do it ahead of time without knowing what will happen in a few weeks. So roughly, we as cryptocurrency investors in March would like to experience information, also referring a bit to the title here, that there is simply a prospect for a decrease in inflation in the coming weeks. We should find this out to be able to defend the thesis that cryptocurrencies are supposed to continue a strong, aggressive bull market. And it would just be a small, somewhere there, branch in the form of a downward correction, not some longer stop along the way. So simply, if inflation in the US were to decrease, it would be a perfect argument to finally ease monetary policy and cause an inflow of capital into the cryptocurrency market, but to sweeten a bit the context of the lack of liquidity in the markets for you, because it's just one of the components. It's not an oracle. It's not, the crux of the matter. It contributes a lot, but it would be too simple for the cryptocurrency market to be correlated solely with the lowering of interest rates, lack thereof. So, for now, things are just weak with that. It's supposed to get better with the same liquidity, and the market is simply pricing in 3 interest rate cuts, interest rates this year. If not in the first half of 25, then in the second. It looks promising for financial markets because then we should expect an injection of more cash. And another thing that affects cryptocurrency investors in these upcoming days and has been affecting them recently is the constant manipulation. Just like that, everyone is already tired of it. They're frustrated. It's not only manipulation from market makers, but also dishonest traders. Celebrities and even politicians are getting involved in the scandal with the Libra token president of Argentina barely quieted. Here, Javier Milei. And the market was shaken on Sunday by the news that Donald Trump announced plans to create a strategic cryptocurrency reserve. And at first glance, when a person gets up and thinks, wow, a great piece of news. So beautiful, wonderful, grand. But in reality, the reserve project is just an announcement. We don't know the date. We don't know the value. We don't know the amounts. And there's nothing concrete behind it. So we just know what assets are supposed to be included in this reserve. The selected cryptocurrencies would be XRP, Solana, ADA, Ethereum, and Bitcoin. It's possible that the list will be expanded, and the effect was that we simply experienced euphoria. XRP saw a 33% increase, Solana 27%, ADA 75%, Ether rebounded 15%, and Bitcoin nearly 11%. And what happened next? Do you remember what happened a few dozen hours ago? Disaster, liquidations in both directions, continuation of the downward trend, shaking out those who fell for the bait. Our longs were triggered at the very bottom, so they totally survived here. They are positive. As for Bitcoin, we went in heavily at 79K with 4x leverage. Ethereum with 3x leverage at $2,120. So it's okay. But as for the rest of the altcoins, only Bitcoin Cash is doing great today. Take a look at how it looks. If I show you the cryptocurrency chart and valuations right now, we can simply see that Bitcoin Cash is reaching $400 entering at 322x leverage we have. A nice few dozen % profit here, which somewhat compensates at least for the losses from other longs I initiated and am waiting on if the rest of the protective orders are fulfilled. They will be executed. The funding isn't very high, so I'm not too worried about that. But scrolling through all these plays in front of you, that's how it looks. And simply in the long term, I believe we will benefit from this. We'll have to endure it. It won't be pleasant or nice, but it should give a boost to the portfolio. Always keep in mind, listen, that we must have the means to add more so the proportions of such longs aren't too large. For me, as I mentioned, longs on Bitcoin and Ethereum and those outs are about 10 to 12% of the entire crypto portfolio. Seems little, seems a lot. On the other hand, it depends on how you look at it. And I just think that with such leverage, averaging around 3 times, when these positions make several tens or 100 to 200%, maybe in the future it will give that. Nicely recover the losses that result from some altcoins, which even if they don't indeed return to their previous values from January, this compensation will come in the form of long-awaited gains from the positions I've initiated. And that's how it looks. Keep listening to the story because I think it's quite interesting from these last few days. Let's go through it a case study because this Sunday pump of Bitcoin when the traditional markets, which were closed, which caused the formation of a huge price gap or gap, as you can see here. And such gaps are filled sooner or later. In this case, it happened sooner rather than later because already in the initial Monday session, the gap was filled and Bitcoin completely erased its weekend gains in a few hours. And that's just how it looked, no different. But the Monday candle definitely looks bad in the red body. Here, if let's look at it closely from this perspective on the daily chart, we can simply see that this body almost completely covers the previous green flag, a rare situation, absurd, even a bit unpleasant, devastating when it comes to the psyche of smaller investors. That's the truth. I felt it myself. I'll tell you, the last 2 days, that it was so much. Damn, usually it doesn't impact my daily life. What's happening in the crypto market? But this really disgusted me. It was so unpleasant. I felt it. So you must have felt it even more, in short. It simply resembles a bearish engulfing candle pattern, where it's simply a signal for declines. Tuesday closed in the green for us, which is a somewhat positive signal. But the local trend remains downward, and considering the level of 71,000, further declines to this price are indeed possible, especially if liquidity is lacking in the market and economic uncertainty. Also strongly affects how, at the present time, cryptocurrencies are perceived. This directly translates to the price action on the charts. Cryptocurrencies are also testing our patience this year, and you really need to have iron, discipline, and nerves of steel, and not just nerves, to come out of this battle victoriously, because we are simply being put to the test. And from every side, we are being tyrannized by this market to gain a little something here. Soon, people will come who, for example, have been with me since last year and will say it's not so bad because we were simply buying in August, September, and October, some cashed in some profits made on certain tokens. Well, here on the channel, see for yourselves, I'll put it on the screen on Dogecoin or on XRP or on Solana. We were making great values of 100, 300, 400%. That's how it worked. We cashed it in, but then I often converted those funds back into altcoins, prematurely into ones that I converted on Ethereum, around $3,000. So there's also a minus of about 30% on that, which I know I'll just wait out, and there's no problem with that. But time is something that makes waiting unpleasant, a period that could have been used differently, for example, by being mostly in stable coins or Bitcoin and waiting longer for what is going to happen. Looking back, if we think about it, hypothetically, it was logical. Trump came in, talked, and everyone got excited. Then a few situations just brought negative sentiment to the market. It turned out to be a wolf in sheep's clothing. Our Trump, yes, I speak if I were in the States. But it's about the very fact of having a pro-cryptocurrency president globally. And soon ancient times came in just 5.5 weeks that we have. Downtrends recently. See how the narrative has changed, how the sentiment has changed. Look at the fear and greed index. I'll show you. It's just a mess. And just a month and a half ago, it was extremely euphoric and everyone was excited about how 2025, especially the first quarter, would be exquisite. So, unfortunately, you can assume something, you can estimate, you can play for something, but always, you need to have a plan B and always have funds outside the crypto market and also just not derive any financial benefits from it when it comes to private aspects, because it usually ends up that what we put into the pool should indeed stay in it, and maybe just stay in it as long as possible. So that time works in our favor when recovering those losses from previous months. So I'm also a bit curious about one thing in all of this. Is it perhaps slowly becoming moment for a trend change? Because sooner or later, QE or quantitative easing will come into 2020. For instance, we also experienced a cash injection into the market, which happened as a result of the global pandemic. The chart from that period very much reminds me on the daily chart of the current moment. Look, the year 2020. Here, before the cryptocurrency surge, before the Bitcoin surge itself, something similar happened. We had a sharp Severe correction from just under 12.5. We dropped to 9 and some change. Here too, we dropped from 110 to 78. Let's just say similar percentage values, and then after a few days of buildup, something like this occurred. I know it would be a wishful approach, but look, previously too, we had consolidation. In 2020 we have it, and now, so it is. Obviously a different range, similar months, even a somewhat similar pattern when it comes to the flow of capital in the market, but the price action is very similar, and despite the fact that we currently have declines that may deepen, there is still a chance for it. Let it not lull your vigilance, because the bull market, in my opinion, will continue soon as money returns to market, and that's just how it works. Even if it seems to anyone now that it's the end, that cryptocurrencies are no more, that everything is overvalued, and so on. Bitcoin and crypto simply absorb the excess money supply like a sponge. Just like when you throw a sponge into the sink for the 100th time, turn on the faucet and pour water as if it wasn't worn out. No matter what history it has experienced and how many times it has done so in life, it more or less, despite those scars and various unpleasant things that cover it. For example, some ugly contaminants. Well, then indeed, the sponge will fill up again. Maybe in a slightly different form, maybe a bit differently, but it will absorb what flows into it. In this case, water, and in our case, liquidity, money that will flow from the markets. So simply, when there is an excess of these funds, it provides returns that are unattainable for the traditional market when it comes to the crypto market. Simply, when the money decreases, it goes against logic. But unfortunately, it's a very unpleasant moment because these corrections are devastating. They hit hard. On the head, on the neck, on the psyche. They are much larger than in other, even risky assets, because cryptocurrency market has last of the hierarchy. Cryptocurrencies are very risky assets, but they also give back, to put it bluntly, proverbially a lot in those 2 months of the year when it's just great. And it is known that the hardest thing in this whole game is to buy well and sell even more. Better, exit the market, kiss the hands, say thank you, and walk away from the table. This is the most difficult part of the game. It's not about making 100%. That's easier than realizing actual profits and then not re-entering the market again, or simply not doing some impulsive, compulsive things that lead to misfortune. So while we're still on the topic of corrections, I remind you that larger drops in Bitcoin during a bull market are nothing new. On the left here, I've put it on the chart for you. You have all the corrections that took place just in 2017. Most people thought at the time that it was a mega bull market, that it was growing tremendously. It's true, but that's 2017. 6 corrections from 30 to 40%, right? And back then, I remember there were fireworks, and finally, especially in November. December was a blowout in the crypto market. My portfolio then increased by 20 or 15 times in about a month and a half. Every day, it practically grew like yeast. I know it won't repeat exactly like that, but the bull market might come, so most people think that buying Bitcoin 10 years ago and holding it was the easiest way to make money. But it's easy to say that without looking back. See what impact a correction has on your psyche, even if you have Bitcoin with a 28% now. And then there were corrections of 40%, and corrections for 10 years had to be survived. You had to endure many corrections and hold on to everything until now. So it's just easy to say that now. But in previous cycles, the volatility was even greater than at the current moment. But people got used to the good times at the end of the year and in January. That's why it looks like this, because it's easier to survive a disaster when we simply start from a bad level and not from some moment where we're just drifting in luxury, where it's pleasant. The fall is stronger. Then, for example, when instead of earning 15,000 zlotys from work, you fall into unemployment. Well, that's harder to handle mentally. It's the same with Bitcoin from 100,000 to 70. We wouldn't have joined the market at consolidation, meaning working 8. We would be downgraded to some position just below for a certain period, knowing that in the future, something good awaits us. These analogies are just silly, but the point is to explain it to you clearly, emphatically, to convey that such situations also occur in life, in other formats and spaces in which we operate. So just look, we have simply just experienced the first correction in Bitcoin. A bigger one, right? In which over the span of 5 weeks, Bitcoin dropped more than 28. And despite the fact that looking back, it's completely normal and one could have expected it, especially in a post-halving year. People are just panicking terribly. They believe the bull market is over after the first major correction, and in such moments, you need to zoom out. I know that especially new people might feel uncomfortable because they haven't experienced these rises in the past and don't even know what it's like. And this feeling helps, knowing that it simply rose before that many times. Bitcoin has such corrections, but if you're mainly in alts, then there's a problem. Ether also doesn't inspire optimism. It simply leads us to dark places and makes our portfolios suffer even more devastating losses. But I believe that Ether will also return to its values, and having such a token, which is the top 2 cryptocurrency in the world, it will be hard to lose. Of course, even having 1/3 in it, sooner or later, it should regain favor. It might be 2 or 3 weeks during the whole year, but it will come back. So I'm just telling you that having been in this market for a long time, it happened many times, and in the end, cryptocurrencies rose like a phoenix from the ashes again. But you have to arm yourself with patience, of course, because the sentiment is average. Fear prevails, uncertainty prevails. But not only in the crypto market. In the traditional market, we also have extreme fear. So there are more and more indications that the USA is heading towards a recession, which is not encouraging. Many people point to increasingly weaker economic data, focusing simply on the deteriorating condition of the American economy. However, I have told you many times that we live in times when the condition of financial markets is not strictly tied to condition of economy, because the only thing that matters for the market, and especially for the crypto market, is liquidity and money printing. Because if someone wants to argue with me on this topic and believes the economy must be strong for financial markets to grow, I tell them to 5 years ago and let them check what the correlation was back then between the economy and cryptocurrency stock prices. This is one of the metrics, as I said, but it's not the only indicator. We simply had a big sell-off back then. There was a momentary panic in the market, but central banks quickly stepped in. They saved the market. But where are we now? I'll show you. So we can take a look. I found 2 posts that, in my opinion, accurately summarize the current state of the macroeconomic situation and also provide an interesting picture of such forecast for the coming months. First, I'll focus on a post by a macro analyst. His nickname is Thomas in Markets, and Thomas begins his post by stating that a large portion of investors has recently moved to the bearish side due to declines in the stock market and worse economic data. Data from the US has been deteriorating over the past few weeks. Okay. The fact is that the latest data shows a rather weak reading of the ISM manufacturing, meaning the PMI has slightly decreased. Yes, new orders have dropped significantly, and the prices paid index has shot up. Therefore, at the moment, we are simply dealing with concerns about a slowdown in growth in the US. Such concerns have existed in the past, appeared before, and ultimately they were just local corrections in the stock and crypto markets in a long-term upward trend. And I'll show you on the charts in a moment. Clearly, because one of the main factors that could have caused these market declines is the delayed negative impact of a strong dollar as well as high treasury bond yields. And this negatively affects the valuation of risky assets. And when in the meantime, we also receive unfavorable economic data readings. Locally, the uncertainty and fear among investors increase. The best way to calm the market would be to take action like they did in the year 2020, and this will also be discussed today. So concerns about a slowdown in growth may also subside if the dollar weakens again, or they may turn into a prolonged slowdown in growth if the dollar remains strong or strengthens further. And here Thomas defined in a simplified way the so-called period of risk caused by a slowdown in growth as the time from the peak of the index to the trough on Bitcoin and in the past few months. Exactly 18 months, we had 2 such periods. Take a look. They occurred at the turn of 2023 and 2024. So here you have this green rectangle in summer 2024. Marked in yellow here, and their lengths were 100 and 111 days, respectively, and the decline measured from peak to trough, marked in gray, amounted to 10 and 2%, and on Bitcoin 32 and 22%. So between 2015/2017, there were also 3 similar periods. Threats of growth slowdown occurred in spring-summer 2015. The end of 2015 and the beginning of 2016, early 2017, and their lengths were 151 days, 56, and 90, and the decline measured from peak to trough was. Look at S&P 13/14 and 3%, on Bitcoin 37 to 43%. So last time, Bitcoin reacted much more strongly than the S&P, and in the first 2 instances, the proportion, somewhere there, the correlation was roughly maintained at 1 to 3. Regarding the magnitude of these declines, each time they were local corrections, after which we returned to growth. That's the conclusion. So the fact that now it seems to you like it's a huge mess, that Bitcoin just won't come back into favor, that Ethereum will always be down that. It doesn't have to be that way. The fact that Ethereum fell almost twice as much as Bitcoin, such a situation happens. It's an altcoin. It's still a risky asset, much more so than Bitcoin, which has been pumped, which institutions are buying, which has great influence from ETFs usually, and so on. So the final word hasn't been said yet in the crypto market. I don't think it's time to pack up. In fact, people who are entering the market now, in my opinion, in the short term over a few months will be able to earn a nice several dozen percent, maybe even 100% plus, because they weren't scared, because they invested some funds and took advantage of the benefits of low prices instead of just waiting for increases and only then looking for confirmation. Okay, the market is growing, so I add to the position. That's not how it's done. When we have funds, we add. When the market is down, afraid. If we believe in certain assets long-term and assume that they make sense. And I remind you, if you like the video, give it a thumbs up and write in the comments if you appreciate these types of updates. Or do you do it at least once a week? All right, but moving on to the present. Currently, we are dealing with a similar situation. The dollar and the yields on 10-year treasury bonds have risen significantly in recent months, and now for a few weeks, they have been falling in the current period of risk. For market growth has already lasted 49 days. The decline, meaning the current growth score drop. Here, you can see from peak to trough. It's 6% on the S&P and 28% on Bitcoin. And the question arises whether, in that case, the dip is already behind us. Is this the end of the correction? And based on the 5 previously mentioned cases, the current length of the period suggests that, unfortunately, not everything has ended yet, and locally, it might get worse before it gets better. Thomas still believes that these are just temporary problems for the markets, that it will soon pass. The bull market is still on. And this, of course, largely depends on whether the DXY has already peaked in mid-January and whether the downward movement will continue. Because if the DXY starts to strengthen again in the coming weeks or months and reaches new highs, it would probably be very bad news for the cryptocurrency market or risky assets as a whole. Then the situation would start to resemble more the periods of 2018-19 and 2022, which were much less favorable for crypto and stocks. But this is not the base scenario for this analyst. For over 6 weeks, he has been signaling that the DXY has peaked and started a medium-term downward trend in mid-January. And the question is whether this time will be different, because some proposed the theory that with the current declines, additional factors may come into play, such as Trump's tariffs, which could strongly impact economic growth, like the fact that Trump and Bessent might intentionally aim to trigger a stock market sell-off or an economic slowdown, even a recession, to achieve certain goals at the start of the term, because they have a short period to do this. And they can still blame the previous administration, and cuts within the framework of Doge could deepen the growth slowdown. However, Trump and his Treasury Secretary, Scott Bessent, are focused on lowering interest rates and printing money as quickly as possible. So it's possible that they now want to create a reason or reasons for the Federal Reserve to act sooner rather than later and increase liquidity. And this, listen, brings me to another interesting post, another analytical approach regarding the macro situation. Because the second analysis I want to share with you is an article by Arthur Hayes. But look, Hayes brought up very important issues that each of you, in my opinion, must know. And now I'll explain to you what Arthur wrote about in his latest article. He places particular emphasis on how in the current political and economic climate of the USA, the only right thing, the one thing they are doing in the long-term perspective is what is supposed to drive the cryptocurrency market, is the increase in liquidity related to the Federal Reserve's monetary policy. Simply according to his analysis, the United States still has the potential to continue borrowing and creating money, which is crucial when it comes to all risky assets, including Bitcoin and cryptocurrencies. He also adheres to the KISS principle, keep it simple, stupid, which means simply emphasizing that instead of delving into elaborate conspiracy theories or hundreds of contradictory messages from the White House or Twitter, one should simply look at the simplest factors. Who holds power over the debt? What are the interest rates? And how does the USA make decisions? And that's it. Because according to him, the key figure is, of course, Trump in this, his second term. The author describes him as a politician who, much like in the real estate industry, always focused on obtaining the cheapest financing possible to then shift the cost to the future and avoid an imminent economic catastrophe. And here, nothing really indicates that Trump has changed these strategies in the context of managing the US economy. Quite the opposite. The current America First plans require substantial financial investments, and this means intensive debt issuance. Therefore, the president will certainly not allow a painful recession, since he could simply increase the scale of debt and reduce costs, for example, by putting pressure on the Fed to loosen monetary policy. And here comes another important aspect, which is the role of the Federal Reserve Chairman Jerome Powell. Because here indeed, although it was Trump who appointed him in the previous term, from the perspective of the new political environment, Powell is a traitor. Just like in previous years, he allegedly leaned too much towards the Biden administration, as exemplified by the rate cuts in 2024, despite the still heated economy. Today, with Trump back in the White House, Powell simply faces the dilemma that on one hand, he must fulfill the Fed's mandate, which is to ensure low inflation, but on the other hand, he simply faces political pressure to prevent a recession. And in Hayes' opinion, ultimately, if the economy seriously falters, Powell will have to give in and start printing money, because mass bankruptcies, rising unemployment, or cascading loss of liquidity would be more painful for the United States than tolerating a temporary rise in inflation. And this Scott Bessent is also a very important piece of this whole puzzle, because he has a few things to say that may strongly correlate with this whole situation. So he, who is the current Secretary of the Treasury, seems to fully share the vision of financing Trump's plans through debt. Here, Arthur also describes the concept of extending the maturity dates of debt, public debt, so that the nominal value does not change, but in real terms after considering inflation and spreading out the repayments over time, the debt burden decreases. And this is simply, in a sense, a soft form of insolvency. But politically and in the media, It just sounds much better than bankruptcy. And that might be the plan. So this context also fits Doge, not Dogecoin, but the department that was simply created, meaning a new institution established to cut excessive spending, search for fraud, and reduce bureaucracy through which Elon Musk is possibly contributing by suggesting Americans would receive a few $1,000s, exactly 5 for each household, in the form of a voucher. Additionally, from the savings that we managed to acquire, well, a socialist form, but still existing. But when it comes to the cryptocurrency market and how it looks, listen, the money situation resembles that of 2020/2022 when the main central banks, including the Fed, printed hundreds of billions or trillions of dollars as part of stimulus programs to avert the specter of a deep depression. Back then, it was caused by the pandemic, and at that moment, during that period, Bitcoin shot up from a few $1,000s to over 60, which meant, more than a 20-fold increase from the very bottom. If the Fed repeats such a maneuver now, even in the least extreme range, then we still have a good chance for a new wave of a bull market, although it might not be as spectacular, because according to these calculations, an additional liquidity injection of 2 to 3 trillion over several months can still translate into a multiple increase in the price of Bitcoin, and the most optimistic scenarios suggest prices around $1 million in a few years' perspective. However, at the end of the article, emphasis is placed on the psychology of financial markets, especially in the context of cryptocurrencies. Bitcoin, like other projects, can simply react swiftly to any signals of increased money supply. And sometimes a rumor or a leak from the Fed is enough to trigger a sudden wave of buying or selling. So if there comes a time when macroeconomic data shows increasing risk of recession, and the US government starts calling on the Fed to cut rates and stop this QT, then a change in sentiment can occur very quickly in cryptocurrency market. And according to Hayes, this is the essence of the current game. So on one hand, we have attempts to curb inflation and cool down the economy, and on the other hand, debt that requires constant rolling over and doesn't allow for a repeat of the 1930s when cuts were made and debt levels were kept low, and monetary policy, whether Trump likes it or not, will ultimately have to simply keep up with the realities of a debt-laden economy, which in his belief opens the door for another spectacular situation where we would have a rally in the cryptocurrency market. And this current lack of liquidity in crypto might be concerning, but many indications suggest that this situation will soon improve, providing further room for growth, simply for our altcoins. And I personally hope for this by the end of 2025, because an interesting thesis appeared in the article about Bitcoin leading the markets first, then dropping, and will be the first to react to the money printing and simply start to rise. Because according to Arthur, in the worst-case scenario during heightened panic, we will drop to around 70,000, which is around the all-time high from the previous cycle. It doesn't have to happen, but it's worth being prepared for it. And remember, just don't overdo it with leverage, because we all wanted banks and the largest institutions to enter this market. So it's no wonder that it has been so terribly manipulated recently. And I agree with Hayes' conclusion that ultimately those who survive this season, by simply holding firmly or wisely accumulating, will win in this cycle, without doing any foolish things along the way. A question as we approach the end. What else awaits us in the next few days? What should you know about? On March 7th, which is already this Friday, the Crypto Summit will take place at the White House. It is a meeting of the US government with representatives of the cryptocurrency industry, something that during Biden's term could only be dreamed of. Donald Trump himself and members will of course participate in this event. The presidential working group focused on cryptocurrencies, as well as leaders of the crypto industry. Participants in the meeting will include Brian Armstrong, co-founder of Chainlink Labs, that is, Sergey Nazarov, representatives of Ripple, or the Bitcoin maximalist himself, Michael from MicroStrategy. And during the event, we will most likely learn more detailed information about the upcoming changes for the industry. Will the date for the introduction of the crypto reserve be announced? Everything will be revealed on Friday. I'm keeping my fingers crossed for something to get moving here. Maybe on Friday, there will be significant trading activity driven by this event by traders. Because so far, it's been more after the fact. Looking at it now, the crypto community is disappointed with what Trump is doing. The actions of his administration, because they only promise big changes, hype them up, and ultimately, there's no tangible and real benefit from it. We'll see if this time it changes and doesn't end with just talk. As for my recently opened positions, this is how the spots look. This is how the loans look. Let's summarize everything. So, the spot on Litecoin is around 0. It depends on when you're watching this. A Litecoin fluctuates between $100 and $120. The link is below on the spot. These are purchases I made from profits realized in December by selling 80% of the entire portfolio during the July bull market, selling Solana at $260, selling XRP at $266, selling Dogecoin at 47 cents. I generated a large surplus of funds, which surpassed the returns from Bitcoin, and in that period it was remarkable. However, as you often see, I prematurely bought a few Ondo tokens at $1.30, and it's down by about 20%. Link is also down by about 20% there. Around 40 sometimes, TON is down. Currently, about 20% are second purchases of Link, so on average. But these were spot purchases, and these are the spots at the bottom. Let's focus on that first. Solana repurchased at 188 is now down, and Ethereum Classic is close to zero. There's about 10% missing there. Bitcoin Cash is currently up about 5 to 8% from those spots. After averaging, Kaya is currently down about 15%, Dogecoin is down 30%, and Pepe is at a very large loss of approximately around 40. A few percent, even 50. So when it comes to those spots on altcoins, looking the truth in the eye, it's weak. The average drop of all these spots is about 30%, and with such a loss, unrealized at the moment, I have to deal with it, considering the purchases and averaging we did along the way. I started buying too quickly. I could have started a little later. And the second, third tranche should have been, listen, the first and second. And finally, the cherry on top. For a situation like now, it would have been nicer, but that didn't happen. As for longs, yes, Bitcoin Cash is at a very large profit. Currently Litecoin was periodically up even by 40%. Now it's down. The protective order hasn't been executed yet, but it's quite close, so it will average out significantly if it goes through. Ethereum is currently, as I look at the time of recording, of the material, it's 200 more. We are up by a nice several percent with leverage of 3 times. That's why Bitcoin is at 89,000, currently entry at 79,600. Remember, we still have those two on Bitcoin at 74. In case the situation from today's video materializes, and I also have an order at $1,780 on Ethereum, in case it takes off. If not, I'll allocate the stablecoins to something else later. So that's the situation with the longs. Despite these drops, a few of them are in the positive. A few spots aren't in such a bad state either, especially considering that Ethereum and Bitcoin longs are on the highest leverage among all of them, plus they are in the positive plus. They hold the largest values proportionally in the entire portfolio, because I have more in Ethereum and Bitcoin than in altcoins. So that's also crucial. So just my positions, I think sooner or later will look like this, like the plays from previous months. Because what you've seen recently is the worst snippet of this career. Starting from August, from Black Monday, we are at a point where it's hard to be in the positive on positions that I build in 2 or 3 tranches. That's the truth, but still, look, when a person endured, held on earlier. I also opened some of those positions and it was good. I managed to make some money on Trump as well. Fortunately, where I think I executed perfectly because most people completely lost on this token, and I entered 6 times on the spot on swings and I just played it at 50% and accumulated that capital for further plays along with you guys. So I simply have a conviction bordering on certainty that this part of the table that I showed here will look like this soon, right? So there will be much more green here. So currently in the crypto market, there is no liquidity, but there is growing frustration, there is anger, there is disappointment. Many repeat, and rightly so, that this is the strangest, most difficult cycle, and I think so too. There hasn't been a more difficult cycle before in the crypto market, especially when it comes to playing altcoins, and it's hard to disagree with that. It's just a bit like the California gold rush, right? I'll throw on the screen here what I mean by this big gold rush search. Yes, that's how it looked, that's how it was. Usually, the ones who profited were the suppliers of equipment, like Levi's, for example. Jeans were created at that time because everyone needed good pants for searching for gold that wouldn't wear out, or for example, some shovels or suspenders, vests, buckets, all of that. Those who made money were those who created them. So now again, cryptocurrency exchanges, crypto projects, some DeFi projects, software providers for trading view analytics. They earn the most because you have to use these, and they don't have the same risk or whether crypto falls or rises as they have 1-to-1 coverage and don't have to hold these cryptocurrencies speculatively, except for liquidity, for example on exchanges. So, I consistently see opportunities in the crypto market to make money in the coming months if someone enters now according to me. It's a pardon if someone was observing, waiting, attack. That's my opinion. But simply, such situations are there to scare us, and ultimately it turned out. Sometimes, especially considering that the cycle hasn't ended yet, there's a greater likelihood that it will continue rather than not. There's a chance to take advantage of it. Recently, I was making purchases on the spot myself. Some were soon, some weren't. I also opened longs, so I'm not just saying that I think it will get better someday, but I'm taking action, investing my own capital, and I believe that such a situation will occur. So I've put my money on it, and we'll see. Take care. Bye.